Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you cannot afford to lose. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a very strong historical structure level and rejecting it to the upside as support. In fact, this same area was already acting as resistance here, preceding all these rejections to the downside. Then the market broke above the zone with this impulse, and at that point, all that previous resistance became support at this level. The market went and tested the level as support, respected it as support, and now it is still in the process of rejecting this level to the upside. So from a monthly standpoint, everything seems quite bullish. However, we have to keep in mind that at any moment we could see the start of a correction, because no market just goes straight up. When you have an uptrend, you are supposed to expect the market to create a series of higher highs and higher lows. So every time the market is creating a higher high and then it is creating a higher low. That is the definition of an uptrend. And in this case, if we look closely, we can see a higher high. So this high here, that is higher than the previous one here. Then we have a higher low. So this higher low, which is higher than the previous one. Then we have a new higher high. So there is a possibility for a correction, higher low, and then once again, yet another higher high. So from a monthly standpoint, everything is quite clear. We can expect more continuation because nobody said that it is clear that here's where the market will start the correction. But overall, we have to keep in mind that at any moment, we could see that correction start. Dropping down on the weekly time frame, however, we can notice how we have a strong impulse followed by this correction. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.32 and 50% retracements, which the market just tested here and started to reject to the upside. So in a situation like this, we could expect to see more potential bullish continuation, essentially the market completing this weekly impulse correction and impulse pattern to the upside. Now, since we have these confluences of support here, so these two Fibonacci levels lining up around this area of price, inside of a confluence of support zone, you would expect to see more institutional longing. And in fact, we will be speaking about institutional longing in just a few minutes when we move to the order flow. But for now, let's go down on the daily time frame and see what we have. Well, from a daily perspective, I did speak about gold quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect first this correction, and then from here, the creation of a new lower low. And in fact, that is exactly what the market gave us. Then again, I spoke about it when the market was here, explained all the reasons for which we could expect this push to the upside, which again is what the market gave us. And when the market was here, explained all the reasons for which we could expect first this correction and then the start of this push higher, which again is exactly what the market just gave us. And by the way, I will link in description all those previous analysis so you can go and check them out for more free education. However, at the moment, what do we have? And what could we expect in a situation like this? Well, before we dig deeper into what we have here from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders. So what hedge funds and the big players in the market are doing. Now, if we look at the data precisely for gold, what we can see is that in the long run, we have seen a massive increase of the net positions from 131.1K all the way up to 199.5K. And we can also notice how the amount of longs compared to the shorts are currently very, very strong and balanced to the long side with 272k longs compared to only 72k shorts from an institutional perspective. So gold at the moment is very strong with institutions massively positioned to the bullish side for this market. However, it is also important to keep in mind that with the last report, net positions got slightly decreased. So we have to dig deeper. And if we dig deeper and we look at what actually changed, we can see that we don't see any shorting from an institutional perspective yet. Actually, we see shorts that are still getting closed. However, the decrease in net positions is coming from longs getting closed. So there is some profit taking from an institutional perspective on the longs that got opened when the market still had not created this massive move to the upside. And some profit taking after a push to the upside from an institutional perspective is very normal. Now, what is important is that at the moment, everything still seems quite bullish with a massive disparity between longs and shorts positioned to the bullish side, so shifted to the bullish side. So if we keep that in mind and move back to the chart, we can dig deeper into what we have from a technical perspective. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in description, so you never miss new updates. Now, back to the analysis. Well, in a situation like this, the important level that we have to pay attention to is this one here. This is the previous daily high. Until the market will remain below this level, it can easily reject to the downside. However, if we get a break above the zone, at that point, this previous resistance would become support. So if we get this break on the retest of the previous resistance turn support, this is where we could expect to see more institutional longing, which at that point could further increase the probabilities of a potential rejection to the upside away from this level. So if we get this break and retest, what would I expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, after this break and retest, at that point, I definitely wouldn't be surprised if we get a potential push higher, continuing the bullish trend that we have previously identified on the monthly time frame. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.